love the channel and find it useful in becoming a happy retiree. Subscribe today. Looks like Mark in Atlanta. Mark, good morning. Welcome to the show. How can I help?
Well, first of all, I just send my condolences for John Lewis. He was a great guy.
I know. Thank you for that, Mark. Condolences to John's family and his friends, especially this time of year. And thank you for that note.
Yeah. The question I have is you're talking about high income earners, and my wife and I are both professionals that are employed here in Atlanta. And we're one of the hardest times of year for me is honestly tax season. We have an exceptionally high tax bill. And I wanted to see, if Trump's plan was going to help us with reduce our tax bill at all.
Well, a couple of, so just give me approximate income for you guys together.
It's about $725,000.
So $725,000. Yeah. So definitely a high tax. So you guys are high earners, married, filing jointly, and I would suspect, and this will be an interesting calculation. I'm sure you itemize deductions on your taxes. Just roughly, what's your property tax bill?
It's about $11,000 a year.
Okay. And then how about your other itemized deductions? So this would be mortgage interest. It'd be charitable contributions, everything that you would typically itemize in a normal year.
I would say probably about $10,000 to $15,000. Although my understanding is that we're largely phased out of some of this.
Well, you're right. The phase outs happen in a bunch of different tax areas. One of them is the child tax credit. So you're not going to, that's getting boosted from $1,000 to $2,000, and the income level is going up tremendously to be able to get the child tax credit. However, in fact, the childhood tax credit, again, it's going from $1,000 to $2,000. $1,400 of that is refundable. So if you're listening today and you have a bunch of kids, that's going to really move the meter for your taxes next year. But it's going to go up dramatically. It's going to go all the way up to $200,000 if you're single and $400,000 if you're married, in order to still be able to utilize that credit. And that's, Mark, what you're talking about, these phase outs. And in your case, because your income's so high, yeah, you're right, you're going to be phased out. But how many kids do you have though, Mark?
4.
4 kids. Okay. What are the ages? How old are they?
They're all less than 17.
Okay. So there's four kids. Let's look at your tax bill. See, this is an example where this is interesting. So you're a super high earner, and you're going to lose some of your property tax deductions, and you're losing your Georgia state tax deductions. You're going to lose your state income tax deduction, which is obviously a big deal. But because the tax brackets are going to they're going down a little bit, and particularly in that over 600,000 category for you, you're going to 37% instead of 39.6, Mark. You're actually going to get a tax savings in 2018 to the tune of about $11,000. So you're going to save almost $1,000 a month, approximately, from the calculations I'm doing, even though you're going to lose the big state income tax deduction. And that's part of partially because of the brackets, even though you're phased out on the childhood tax credit. Of course, this is an estimate. You're going to have to do your taxes again next year, but I would tell you that this is good. I'm happy to report good news for you and your family. Merry Christmas, man. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.